Alright, hello everyone, and welcome back to the daily update of 1000 day challenge. These days have already dropped, so let's get started. First and foremost, there's no change to equity balance right now. I'm actually in the trade for Bitcoin itself, but I want to mention I've only taken half the profit, so the half of the position is still trailing stop loss behind. So until I take the other remaining of the position, close it, and I'll update the balance itself. So whether how much the profit will be, let's see how things goes. Alright, other than that, if you look in terms of S&P 500 Nasdaq, we did form a red bearish candlestick yesterday itself. But bear in mind, as long as we do not fall out of a very strong region of the range itself, I still lean towards a potential consolidation phase rather than outright come bearish phase, simply because of the fact that we did technically form a low and a higher low itself, and then this is a high and a lower high itself. So this itself to me is more like a consolidation pattern. So over here, we're very much likely, in my opinion, consolidate over here, or at least maybe one more time to form like a triangle formation before we actually break out. And the reason of a triangle formation, I would say, is more towards like a tightening out volatility, whereby people are taking profit, people are taking profit and entering position, taking profit, entering position, or the vice versa in terms of that. So because of that, the range tends to tighten, and when it does break throughout that, it will mean that people who have already consolidated have decided to make a move towards the side of the lower liquidity side of things, generally speaking. All right, so beyond looking into just that, same thing you get here when you compare Nasdaq-wise, similar formation, and in terms of China equity-wise, we're seeing a very similar formation, but it's more like the AHR race of the two of them. So in terms of AHR, I mentioned definitely not a good thing to break below 20 exponential moving average. But the key thing here is that we do have the 50 simple moving average looking upside, and as long as it remains supportive or price remains perfect, we could still have confirmed this absolute long-term bottom, which means the next 1 to 2 years will not be going below that. But of course, bear in mind there's a lot of bearish sentiment in the market for China equities itself, especially with how the property market could be impacted. But like I said, all of those are speculation, and a lot of things are, in a way, in my opinion, already factored into the worst case scenario. But of course, we could also have a sudden panic, especially from my understanding, is the fact that China equities still tend to be predominantly dominated by retail buyers and sellers, which means liquidity-wise is much less, and that results in much higher volatility in that sense. All right, over if you look in terms of KY, similarly, we do see support in the 50 simple moving average. I want to mention, because previously we're acting at resistance, and resistance, it's very normal that we do see support over here. The key thing here is that we definitely do want a strong bounce, which we are coming actually seeing it there. So what we do want for tomorrow, which is Thursday and Friday, we do want a very strong breakthrough above this green candlestick from today. If we do actually consolidate over here for extended period of time, then definitely not a good thing. Over here, we generally want you to consolidate as little as possible, like 1 or 2 candles, and then we go down, like this one, 2 candlesticks go down, this one candlestick we really go down, 1 candlestick again, and then we go down. So the last time we do consolidate below that, then the DT tends to be better in the sense that we'll be less likely to go towards the opposite direction. If we do stay towards the direction, then we'll be more likely to break there. In this case, then we're more likely to break towards the downside. All right, and then finally for Bitcoin, 70 has a very choppy move earlier today. And in terms of experimental trade setup, I did trigger the stop loss itself, but that is another thing that I mentioned. I'm still not launching into my major account setup. All right, so if you look across here in forward chart, I do see like a whiplash over here, whereby there was another push up and there's another push down. So that could be exhibited on the 1 hour chart, where you could see more clearly in that sense. So you can see that we definitely open over here, push all the way up, and then we push all the way down, and then we close all the way up again. So definitely there was a spike of volatility. I would believe that there is some people actually looking to sell and looking to buy the market. I'm not sure what's the intention behind it, but it seems to be across the board crypto market facing this. So definitely when it comes to this kind of whiplashing in that sense, you definitely do trigger a lot of stop losses on both sides, triggering the extra volume that you do see over here. But let's see how things goes. Definitely things seems to be picking up and going back towards the normal area here. So I'll say that ignoring this red candlestick itself, I would say that the range still remains between these 19.3K to these 19.8K region that we are consolidating over here. So over on the 4 hour chart, what I'm looking at, waiting to close my short setup, is for price to actually close above the 20 exponential moving average. So until that has taken place, I'll continue through the stop loss. How low it could go, I do not know, but let's see how things goes. Otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye bye.